So we are doing merger of sole trader with sole trader, and this is the activity that is an extension of the sum that we've done before. So it's just for practice. So you should be able to do this sum yourself. Okay.
Hmm.
Tell me what happens when you merge one sole trader with another.
When you merge one sole trader with another, the assets are combined of the business.
Yeah. So,
The assets are combined, so both the businesses are like combined together.
okay, fine. So first thing that you have to find out is NATO. What is the first thing that you have to find out?
The NATO.
What is NATO?
It's NATO is net assets turnover value. It's also known as the capital.
NATO is the net assets taken over.
Sorry, taken over, and it's also known as the capital.
Okay. So you take over the net assets. What is net assets?
Net assets are basically to find out net assets are assets minus current assets plus non-current assets minus current liability minus non-current liability.
Okay. And these assets, when you take over in the merger, they will always be at the revised value, or I would say they would be at the agreed value.
Yeah.
Okay, fine. Now, can you read the question for me? First,
That
see what they have asked you to prepare.
okay.
What
So
they've
they
asked you to prepare
revise statement for of financial position for each sole trader.
before
The merger.
before the merger. So that means they want you to make a revised statement. They have
Okay.
already given you the statement of financial position,
Hmm.
and they want you to prepare a revised statement of financial position. That means there might be some adjustments that has been taken place, or some assets or liabilities might have been revalued,
Okay.
and they want it excluding the goodwill adjustment.
Hmm.
Are you with me?
Yeah.
Okay, fine. Now read the question.
Garrett and Z each operate their own business as sole traders but have decided to form a partnership. The summarized statements of financial position at 31st December 2020 were as follows.
Okay.
Garrett, non-current
These are
assets
the
92.
non-current assets. These are the current assets.
Yeah, and the
And the
liability
total
and current.
assets. Yeah.
Yeah.
This is the capital of Garrett. This is the
Hmm.
capital of Z. You have current liabilities.
Hmm.
Okay, fine. So what have the partners agreed?
The partners have agreed that Garrett's non-current assets should be valued at 120,000.
Okay. So that means the agreed value of non-current asset is changing.
Okay.
When
Z's
the
inventory. Z's
non-current asset,
inventory.
darling, when you read the question, you should mark it along with it and say
Okay, fine.
this is of it.
So we write
Okay.
non-current assets as 120,000.
So Garrett's non-current asset is how much? 120.
120,000.
Okay. So this is the revised value, or I would say this is the agreed value for the non-current assets.
Hmm.
Okay. Then
Then Z's inventory is only worth.
tell me. Read.
Z's inventory is only worth 7,000 and trade receivables are only worth 3,000.
On these inventories, how much?
7,000 and trade receivables are 3,000.
Z's trade receivable is 3,000. When we are
Yeah.
changing these values means what?
What?
When we are changing this value means what?
Revaluing it.
These are agreed values, or we could say these are the revised values. Are you with me?
Yeah.
These are agreed values, and the agreed values are changing for Z.
Huh.
Read ahead. Please read, dear.
Okay. Garette's trade payables are in fact only worth 18,000.
So what will you do?
You have to write 18,000 over there.
Hmm.
Okay. And goodwill has been agreed at 30,000 for Garrett and 50,000 for Z. But this won't come now
This won't come. Why will it not come?
because it's written excluding the goodwill.
Because it is written excluding the goodwill adjustments. Okay.
Yeah. Partners will share profits equally.
Okay, the partners will share profits equally. What are you required?
You're required to find the net assets transferred to partnership at agreed value.
Okay, what else?
That's it.
Okay, how will you find the net assets transferred to partnership at agreed value? What is this net assets transferred to partnership at agreed value? What does this mean?
This is the NATO. You have to do non-current asset plus current asset minus closing current liability minus non-current liability.
Okay, fine. So if I talk about Garrett,
Uh,
what is a non-current asset for Garrett?
120,000.
For Z,
61,000.
current assets.
Current asset for Garrett is 9,000,
Okay.
12,000 and 4,000.
Okay.
And for Z it's 7,000, 3,000 and 9,000.
Okay. So these are the total assets taken over.
Yeah.
From the total assets taken over, if you subtract your current liabilities,
Hmm.
so what will you get?
The NATO.
The NATO. Well, they have asked us to find the NATO and then they've asked us to give the statement of financial position. So, what will be the different thing that will come in the SOFP?
I don't know this. Capital and liability.
NATO is equal to what?
Capital.
That means they want you to show the capital.
Okay.
How will you show the capital?
You'll do this exact same thing now.
You'll do the exact same thing, but where will you put the capital?
I don't know this. I don't understand very good.
Okay, fine. So they've asked you to prepare statement of financial position. Are you with me?
Yeah.
If you prepare statement of financial position, what is the first thing that you will write?
First thing you will write is non-current asset.
Then what will you write?
Current assets.
Then what will you get?
Capital and liabilities.
If you add your non-current assets and current assets, what do you get?
The total assets.
Okay, so if you add your non-current assets and your current assets, you are going to get your total assets. Are you with me?
Yeah.
So can I just take this and I can say this is the total assets section?
Yeah.
Okay.
Hmm.
What? This is the total asset sections according to me. Then what?
Nothing then. That's it.
This is what you make in your SOFP.
No, then you add now capital and liability.
So how will you get that?
How will you get that? Matlab, by doing this non-current asset and all minus this
I did.
whatever.
I did non-current assets and current assets. I added. Then what?
Then I don't know. I'm not understanding this thing.
Okay. Then what? After the total assets in your statement of financial position, what do you do? You will write capital and liabilities, right?
Yeah.
Can you write capital and liabilities? What will you do? You'll
Then
write
you write
capital.
non-current liability, current liability.
So first we'll write capital only, right?
Yeah. First you write capital.
So I will have capital accounts. Of whom?
Of the partners, Garrett and Lee.
So I will write Garrett
Hmm.
and I will write Z.
Yeah.
How much?
Whatever you found, upper 127,000 and 69,000.
So NATO is equal to capital. Do you agree?
Yeah, that I
Okay.
agree.
I will write capital account. This is for Garrett and this is for Z. So I'll write 127,000 and how much? 69,000.
69,000.
After that, what will I write? You don't remember the format of balance sheet?
No, then you write non-current liability.
Is there any non-current liability?
No, then you directly write current liability.
Then you will directly write current liabilities. What are the current liabilities?
The current liability is the trade payables.
Hmm. How much is trade payables?
It's 18,000 and 11,000.
18,000 and 11,000. So what is your total liabilities?
Total liabilities,
Total capital and liabilities. How much
one,
it is?
it should match. So 145,000 and 80,000.
Did you calculate it is this much?
Yeah, I know it is this much only.
Now you have to calculate.
Yeah, in exam I do.
Okay, so this is making a statement of financial position before doing goodwill adjustments. When we are doing the sum of merger, what was the first thing that we found out?
First we found out the NATO.
After what is NATO?
The NATO is non-current asset plus current asset minus current liability minus non-current liability.
What is the full form of NATO?
Net assets taken over.
The number will be equal to what?
The capital.
Okay, fine. It will be equal to the capital, and then they ask you to prepare including goodwill. Now read the P part what they ask you to do.
Calculate the opening capital account balances that will appear in the statement of financial position after accounting for goodwill.
So when they say after accounting for goodwill means what?
That this what we calculated was before accounting for goodwill.
No, we calculated capital before the goodwill adjustments. Are you with me?
Yeah.
Now they want you to find out the capital that should appear in the statement of financial position after accounting for goodwill. So when I say after accounting for goodwill means what?
That you have to raise the goodwill, take it in consideration.
Yeah, raise the goodwill and what?
Take it in consideration.
So accounting for goodwill, you have to do two things for
Also,
goodwill.
raise and write off.
Okay, fine. So if this is your capital account, just take for example the balance begin now would be on the credit side, right?
Yeah, yeah.
So if you raise the goodwill, where will you put it?
On the credit side,
And if you write off, where will you put it?
debit side.
On the debit side. Okay, fine. So if I have to make it in the statement form, so in the capital account balance that we have put, raise the goodwill will be added or subtracted,
Added,
and write off will be
subtracted.
okay, fine. So they want you to find out what?
That the opening account balances that will appear in the statement of financial position after accounting for goodwill.
So you will start with the capital.
Capital account.
So can you do it along with me? You will start with the capital account balances, or I would say this you will take the net assets at valuation.
Yeah.
Net assets at valuation is also called what?
NATO.
NATO. So how many partners do you have?
Two.
Two. What are the two partners?
Garrett and Z.
Okay, so you took the capital account balance or the net assets at valuation before the goodwill adjustment, which is how much?
69,000.
127,000 for Garrett and 69,000 for Z.
Hmm.
Then goodwill is raised.
Yeah, so you have to add. The goodwill raise will be added.
What is the goodwill?
Can you go upper once? I
What
don't
is the
remember.
question?
Oh yeah, sorry, I didn't read this. Goodwill 30,000 for Garrett and 50,000 for Z.
You should see my screen and work on your screen.
Yeah, okay.
Goodwill raised 30,000 for Garette and 50,000 for Z. Come on. So how much this comes up to?
157,000 and 119,000.
Then what will you do?
Then you'll subtract goodwill written off.
So it will be goodwill written off. A new profit sharing ratio.
Yeah.
How much?
50, like equally. So,
Total goodwill is 80,000, right?
yeah, so 40,000 and 40,000.
So goodwill will be written off equally 40,000 and 40,000. So this will become the revised capital balances after the goodwill adjustment.
Hmm.
How much?
This will be 117,000
Hmm.
and the other one, wait, after it.
79,000.
Okay.
So if you see before the goodwill adjustment, what was the total capital?
127,000 and 69,000.
So it becomes how much? 196,000.
Huh.
After the goodwill adjustment, what is the total capital?
117 and 79.
So the total capital would remain the same. Okay. The total
Hmm.
capital would remain the same only when we talk about the individual partners. The individual partners' capital account balances would change
Yeah.
because you raise the goodwill and then you write it off. So we raise it in the proportion what they have brought or what is agreed, and you write it off equally. So only the closing balances of capital will change. Non-current assets, current liability would remain the same.
Okay.
Are you with me?
Yeah.
Okay. Now what they've asked you to prepare.
The financial statement of positions.
This statement of financial position of Garrett Z partnership. That means the partners are now merged together. So it would be the balance sheet of the partnership. Are you with me?
Yeah.
So the non-current assets would remain the same.
Hmm.
Non-current assets would remain the same. That is 120 plus 61.
Yeah.
Are you sure?
Yeah.
The NATO that we calculated, let's take this down so you get a clear picture. The non-current assets would remain the same.
Yeah.
Okay, 120 and 61, so it becomes 81,000.
Hmm.
The current assets will also be merged up together.
Yeah.
Trade receivables will also be merged up together, 12 plus 3. Cash
Hmm.
and cash equivalent will also be merged up, and this will become your total assets. Your total assets is what? Your non-current assets plus your current assets. Are you with me?
Yeah. Got it. Huh.
But only your capital account balances, the total capital will remain the same. It will be 196,000. But for
Okay.
individual partners, it will change after goodwill adjustment. But for individual partners, it will change after goodwill adjustment. So how much will it become? Check. 117,000 it will become for Garrett. Are you with me?
Yeah.
And for Z, it will become 79,000.
Okay.
Yes?
Yeah.
You're understanding or you're not understanding?
Understanding. Understanding.
117,000 for Garrett and 79,000 for Z. The total capital will remain 196,000.
Yeah. Okay.
Before goodwill adjustment, Only this was different.
Huh.
The proportion was different. After goodwill adjustment, the proportion will change, but the total capital would remain the same.
Yeah, this I got.
And the current liability is 18 plus 11, 29,000. So your total assets is equal to your total liabilities.
Hmm.
So there are four things. They could be asked to calculate anything. First thing they could ask you to calculate is the NATO. NATO is the net
Net
asset.
assets.
Hmm,
Net
ta-
assets turnover.
taken
Taken
over.
over, sorry.
Then they would ask you to make a statement of financial position without goodwill adjustments. Then they
Yeah.
ask you to do the goodwill adjustments and find the new capital balance after merger. How do you find this?
Okay. First, you have to basically to find after merger. You have to, how do I explain it? It's going
First,
to
you
be
do the
written.
NATO,
Yeah.
add the goodwill raised,
Hmm.
minus the goodwill written off. Correct?
Acha, like that you were asking.
So, when they ask you to find out new capital after goodwill adjustments, how will you do it? New capital after goodwill adjustments, how will you do it? You have the NATO,
Yeah.
add goodwill raised,
And minus goodwill written off.
so you get the revised capital account balances. Can you please
Huh.
tell me if they ask you to find the new capital after goodwill adjustments, how do you do it?
You add goodwill raise and you subtract goodwill written off.
From where?
From the account, whatever you're making.
From the NATO.
Huh.
NATO is what? The old capital.
Huh.
Then you do goodwill adjustments. What is goodwill adjustments? Add goodwill, raise minus goodwill written off. So you
Huh.
get the revised capital account balances. Then you will make the new statement of financial position after goodwill adjustments. Yes?
Yeah.
So come on, do the B and C part. And with this, we complete our example number 2.
Okay.